Well, there is a profit this time. We were expecting the company to report a loss for the 7th consecutive quarter. The expectation for the loss was about 1,500 crores. So compared to that, the company has reported a profit of close to about 256 crores. So that is looking like a bait. But we'll await. There is likely to be some sort of an exceptional which is boosting the company's bottom line. Maybe on account of, yes, there you go. There is a one-time gain on the sale of ICISL, which is basically the standalone towers of Idea. So that has boosted the bottom line to the tune of more than 3,000 crore. 33 something is what I read. So if you remove that, then you would get a consolidated loss of close to about 1,500 crore rupees, which will be in line with market expectations. So the bottom line has been bumped up on account of a one-time exceptional gain. Yeah, 3,364 crore, which is on the back of the company selling its stake in the independent towers that Idea held. X of that, the loss would be closer to 1,500 crore rupees, in line with expectations. Even the top line at 5,890 crore appears to be bang in line with street expectations. Some of the key metrics that we'll await details on will be the ARPU, which is the average revenue per user. That is important because Bharti had a 9.5% drop in the average revenue per user, but Reliance Jio, on the other hand, had only a 1.8% decline over there. So there was a big divergence in how the ARPUs played out in the industry. For Idea, we are expecting a weak ARPU performance, a decline of close to about 10-odd%. So we are expecting that. Our margins are looking quite weak. So margins at 11.2% is lower than our expectations. And if I compare it to a year ago, actually the margins have more than halved. 11.2% would compare with 23.5% by way of margins. So margins for Idea have halved. That gives you a sense of the kind of operational pressures that the company is sitting on. There you go. The EBITDA of 659 crore would compare with 1,447 crore a year ago. So if you just see the decline that we've seen, on a quarter-on-quarter basis, it's a very sharp fall. So these are looking like a very, at least, on the operational front, it looks like lower than what the street was anticipating. As of now, these are the only details that we have in line in terms of revenues. Margins have come in lower than expectations. It's missing our expectations by more than about 300 basis points. Profit of 256 crore, but that is bumped up on account of a one-time gain on the sale of assets. X of that, you would say the consolidated loss is in line.
Yeah, as you said, if you take that one-time gains out, you bang onto those numbers there. But I believe you have a guest as well with you now, Reema, to take the same.
Yes, we have Naveen Kulkarni joining in. Naveen, your thoughts on the numbers?
Numbers from my expectations look weaker. The revenues are slightly lower than what I was expecting. EBITDA is definitely weaker. So EBITDA expectation is closer to 900 crores. Here put it close to 60. That number is weaker. Profits are of course in line, but that's not a real number that we were looking at this one. It was a core operating performance which was more important. Revenues definitely are slower, and there is a much higher pressure on margins than what we were anticipating.
Okay, the ARPU for the quarter has come in at 100. What was your own expectation for ARPU?
So ARPU number more or less a little higher than this number, around 2.5% higher than this number. So 100 rupees ARPU, I would say that is a little lower than we were expecting, but that I think is okay. But important factor here is the EBITDA number, where the margins look weaker. But this could also be the quarter before the merger. So there could have been some other costs which were associated with the pre-merger, probably were some voluntary retirement schemes and things like that. That could have led to higher operating cost structure in this quarter.
There is an element of one-offs in the margins?
There could be some element one-offs in the margin. That's very much a possibility, is what I feel. But we will need to look at the numbers a little more carefully to arrive at that kind of a conclusion.
Okay, I'm just reading what the company said. They've said the revenue for the quarter has declined to 5,889 crore, mainly on account of downtrending of ARPU, representing a normalized decline of 2.9% quarter-on-quarter after you adjust for the impact of exclusion of 1-month tower revenue because they completed the sale of the Idea standalone towers to ATC and the full quarter impact of the RUC or interconnect usage charge reduction. So therefore, the EBITDA has come at 659 crore. The ARPU for the quarter has come in at 100 versus 105 crores. So they've indicated that, there are three key reasons for the pressure. Downtrending of ARPU. Secondly, the impact on account of the sale of its tower assets. There was a 1-month impact because which revenues would have been hit as well. And thirdly, on account of the interconnect usage charge. Does the stock even react to these numbers, or is all going to be about, Idea, Vodafone and the kind of synergies they can extract in the medium term?
It might react a little bit, is what I think, because there is some bit of weakness in the numbers. But I think more so going ahead, it will depend on how Vodafone and Idea integrate and what could the synergies they are able to derive, how they pan out. But that's a little long term, I would say. In the short term, the results are weaker, so there might be some reaction over the next, I would say, a week or so.
Okay, that is Idea. It's a miss in terms of the margin performance and therefore the stock could be under pressure. The average revenue per user at 100 rupees is slightly better than the CNBC TV 18 poll. But on the whole, miss on the margin front. With that, it's a wrap on this edition of Closing Bell. Stay tuned. After the bell is up next.